Central banks, the financial guardians of nations, wield immense power over economies and currencies. A significant yet often overlooked aspect of their role is their management of gold reserves. Understanding how central banks use gold and why they hold it is crucial for any investor, as their actions can have a profound impact on the gold market and ultimately your financial well-being. It is important to understand how the banks affect the world's finances. Welcome back to the Gold Protocol. Today we're lifting the veil on the secretive world of central bank gold holdings, exploring the strategies they employ and the reasons behind their decisions. We'll uncover how these actions ripple through the global economy and influence the price of gold, empowering you to make more informed investment choices. We want to make sure you have the necessary information to invest wisely. Central banks, guardians of monetary stability. Central banks are institutions responsible for managing a country's currency, money supply, and interest rates. Their primary goals are to maintain price stability, promote full employment, and ensure the overall health of the financial system. They are responsible for money and its influence on the world market. Monetary policy. Central banks use various tools to influence the economy, including setting interest rates, controlling the money supply, and regulating banks. Monetary policy shifts are necessary to sustain stability. Currency management. Central banks are responsible for managing their country's currency, including maintaining its value and ensuring its availability. Every county is responsible for their currency. Financial stability. Central banks work to prevent financial crises and ensure the stability of the banking system. They have many responsibilities with financial systems. Gold's role in central bank reserves. A historical perspective. Gold has been a part of central bank reserves for centuries, serving as a store of value, a symbol of financial strength, and a hedge against economic uncertainty. It is viewed as a tangible item in their reserves. Historical significance. Gold was the foundation of the international monetary system for much of the 20th century, with many currencies pegged to gold. Currencies were once based on gold, but this has changed over time. Store of value. Central banks hold gold as a long-term store of value, preserving their wealth and protecting against inflation. It acts as a safe and durable monetary asset. Diversification. Gold helps central banks diversify their reserves, reducing their reliance on any single currency or asset. Different assets assist in better investment. How central banks use gold. Strategies and motivations. Central banks employ various strategies when managing their gold reserves, driven by different motivations and economic conditions. Buying gold. Central banks may buy gold to increase their reserves, diversify their holdings, or signal confidence in the market. Buying is one aspect that affects reserves. Selling gold. Central banks may sell gold to raise funds, reduce their exposure to gold, or influence the price of gold. Selling can affect how central banks manage their funds. Leasing gold. Central banks may lease gold to earn income or increase the supply of gold in the market. Leasing has an effect on the available gold. Repatriating gold. Some central banks have been repatriating their gold reserves held in foreign countries, signaling a desire for greater control over their assets. Repatriation shifts how countries and banks are operated. Impact on gold prices and your investments. Central bank actions can have a significant impact on gold prices, creating opportunities and risks for investors. Demand and supply. Central bank buying increases demand for gold, potentially driving up prices. Conversely, selling increases supply, potentially driving down prices. Supply and demand affects monetary policy. Market sentiment. Central bank actions can influence market sentiment, signaling confidence or concern about the economy. Confidence is necessary to succeed in finances. Currency fluctuations. Central bank gold transactions can impact currency values, as they often involve the exchange of gold for currency. Currency affects how people and governments do business. The importance of monitoring central bank activity. Staying informed about central bank gold policies and actions is essential for any gold investor. Track central bank holdings. Monitor official data on central bank gold reserves, published by organizations such as the World Gold Council and the International Monetary Fund. Always track holdings for a more accurate picture. Follow news and analysis. Stay informed about central bank announcements, statements, and policy changes related to gold. It is important to know announcements to make the best decisions. By understanding the strategies and motivations behind central bank gold management, you can gain a valuable edge in the gold market, making more informed investment decisions and navigating the complexities of the global economy with greater confidence. For more valuable insights into gold investing and economic trends, subscribe to the Gold Protocol. Stay informed and stay ahead. Thanks for watching.